Fast fact. In 1826, there were 331 distinct domestic versions of the dollar circulating in the United States, alongside countless varieties of foreign coin. To eradicate private currency, Congress placed a heavy tax on banknotes issued by state-chartered private banks, effectively killing off thousands of local currencies by 1867. I'm Drew Thomas, and this is Bank Chats. All right, so I have an interesting question for you.
Okay, shoot.
And I don't think that you're going to understand why I'm asking this question, and our listeners and viewers definitely won't if they've watched the thumbnail or listened to the title or watched the thumbnail.
Uh-huh.
But who's your favorite magician?
My favorite magician.
Yeah, favorite magician. Do you have a favorite magician? Because I don't know how common it is to have a favorite magician.
Yeah.
But
I was big into magic when I was younger. Probably David Blaine.
David Blaine?
Yeah.
Okay.
How about you?
Is he a magician or is he a performance artist?
Ooh, he's a little bit of both.
Because I have to wonder sometimes, like I think he's definitely a legitimate magician, but a lot of his stuff is kind of like
It's endurance and stuff. Yeah.
Yeah, like
I don't know what's actually real and what's not.
Yeah. I don't know. There has to be a way that he's getting food and oxygen whenever he puts himself into a block of ice in Central Park in New York for like 3 days, right? If he's not, that's really, really impressive endurance.
Right. Hold his breath for 9 minutes or whatever it was. Yeah.
Is that what he did?
He was underwater. He did. Yeah. He held his breath for some ridiculous amount, like 9-10 minutes or something like that. Yeah.
Wow. Yeah, no, I mean, I like David Blaine. I've been more the traditional magician, I guess, maybe like the whole Penn and Teller, style or whatever.
Yeah.
But legitimately, Chris Angel.
You a mind freak?
My daughter was a mind freak.
Oh yeah.
100% had the which is crazy because a lot of young girls don't really get into magic. It's usually young boys that get into magic, and then girls kind of like get wowed at it later on in life. I think maybe a little bit traditionally again. Yeah. But now I don't know if she so much liked the magic or she liked Chris Angel.
Wow, I'm sure she liked Chris Angel.
Yeah.
I went to little magic camp when I was young too. I mean, I was really into it. Yeah.
What did you learn? Did you do card tricks or did you do like sleight of hand?
I was like 8, so it was like basic. We learned like a couple coin tricks, a couple tricks with ropes, rubber bands, and
rubber bands.
Rubber bands.
Oh wait, we have rubber bands. Have a rubber band.
Okay,
there you go. All right, show me a trick.
All right, the trick I learned.
Okay, here we go.
Was getting a rubber band to go through your thumb.
Oh,
whoa.
Nice.
Yeah.
Very nice. We'll see how well that shows up, but you might have to spotlight that on camera.
Okay.
We'll see. Yeah, I didn't give you a very thick rubber band, but yeah, that's pretty cool. So
yeah, okay.
Here's why I'm asking. Because before we get too far down this random road, I wanted to talk, or we discussed talking a little bit about the fact that the episode we did earlier this month was sort of in honor of our 250th anniversary as a country. Mm-hmm. We had somebody that asked the question, how much change could you save in about 250 days, right? Mm-hmm. And so we did an episode on that, and it got me thinking that something about 250 years of our country wouldn't be a terrible way to look at a podcast episode, right?
Yeah.
But I'm the only one that really likes history to the degree that and we know this talking about it. So I thought, well, let's look at it from the perspective of what was it like to use money if you were using it, say, in 1826 versus 2026.
Okay.
Right.
200 years. Yeah.
Yeah, it's 200 years. I mean, it's not 250, but I don't think it's really fair to say how we're using money in 1776 because the country didn't really exist.
All right. How are you going to use money?
Yeah, yeah, really. You were using whatever money you had and stuff. But so I thought, okay, let's go back 200 years and do a comparison and see what is different about how the average person used money in 1826 versus today. And what's the same and what's different, right? And I really think that the whole magic thing is, I think there's a lot of people that would think that how we manage our funds today, if you pulled somebody from 1826 and showed them how we manage our money today, I think they would think it was magical.
Mm-hmm. Oh, definitely. Yeah.
You know, the idea of being able to move money through your phone, right? That I have a phone that I can carry, a communication piece that I can. Yeah. I always say that this is not a phone. This is a computer. Yeah. It just happens to have a phone app and function in it. Yeah. But so yeah, I thought that might be an interesting way to sort of celebrate 250 years of the country and kind of look back. So. So yeah, so I don't know. Like, I guess we can start with just your general banking relationship, right? Like, I mean,
did banks? I mean, did people actually bank quite often, or was this like a luxury?
I don't know. I don't know if I'd call it a luxury per se, but no, I would say that most people back then did not have a routine banking relationship.
Okay.
They mostly kept their money where we tell people to never keep their money at
under
point.
Their mattress. Yeah.
Under the mattress, in the walls,
yeah.
Between pages of books and, in coffee cans and things like that.
Okay.
If they had money at all, a lot of times, they were managing their stuff through the barter system or something along those lines, but money, coins, primarily, things like that, definitely just kept around the house, not so much in a bank, and for various reasons that I'm sure we'll get into.
Yeah. Fun fact, back in ancient Rome, did you know that people kept their money in the basement of temples?
Really?
Yeah.
That's kind of cool. Why?
Figured that the priests would protect all their money. Yeah.
I suppose there's good logic to that.
Armed guards and priests and just workers in the temples. Yeah.
Huh. That's cool. I mean, we touched, I know, at least at one point in one of the episodes about how, in the ancient world, that was this concept of how to move money from over long distances safely was to have a merchant in one city and a merchant in another that had an agreement, and you would deliver your money to the merchant where you were, and they would give you basically an IOU.
Right.
And then you would travel to that other city to the comparable merchant and turn in the IOU, and they'd give you the money.
Okay.
With the idea being that you weren't traveling over these long distances and just being robbed every time you turned around.
Okay.
Yeah. So there was that. But
were there long distances between banks? I mean, were there a lot of banks back in 1826?
No.
Okay.
No, I mean, really, according to the research that I have, there were about 300 banks in the United States around 1826.
Okay.
And I don't mean 300 banks with like 25 branches apiece.
I
mean
300 banks total. Okay.
Yeah. So
now westward expansion was still happening. So, I mean, that was in a smaller area too, but.
True.
Yeah.
Yeah. The great wild Western Ohio territory, that you had. But yeah, I mean, so, traveling to reach a bank was definitely, I mean, think about it now. Like, if you want to go to, I don't know, Altoona from it's like a 45-mile drive, right? You can go there for dinner and back in a couple of hours, whereas a 45-mile journey back then, especially if you were walking or taking a horse or a wagon or something, I mean, that was a several day turnaround. You didn't just
your horse could have died and you got dysentery and,
There's the Oregon Trail.
Yeah. But yeah, you think of it, like airplanes. I mean, you can get anywhere around the world in one day now. Which is ridiculous.
Pretty much.
Yeah. That's crazy.
Yeah. I still find that, I mean, I don't travel as much as some people do, but I still find it fascinating when I do travel and I wake up in Nevada and I can go to bed in Pennsylvania.
Yeah.
I just think that's just amazing.
Yeah. And it's like, it's common. Like businessmen do it daily. I mean, like, like you, I don't travel very often, so it's a big deal when I go on vacation and I have to get on a plane,
Yeah.
But for your average businessman that's traveling, half of the year, it's like, what did you do today? Oh, I got on a plane to California, and then I jumped on a plane to Washington State, and I came back for dinner.
Yeah. And the funny thing is we're so spoiled in our world today that if there's a delay of 45 minutes at the airport, we're annoyed.
Yeah.
We're like, oh my gosh, I had to spend an extra 45
I'm gonna
minutes.
miss my other plane. Yeah.
Yeah, really.
Okay, so besides proximity, was there any other reasons why you wouldn't bank? If you had the ability to bank, if you had a bank down the street, were there any other reasons why you wouldn't?
Yeah, I would. Well, so banking was not then what it is today for sure in terms of, so we started out as a country with the first national bank of the United States. That failed. Then we had the second national bank of the United States, and that failed. But the third one stayed up. No, that's Monty Python. The idea that you had these small banks, some of these banks were literally only just the bank of the town you were in, right? And it might have been the local rich guy that had the bank, right? And because he could afford to, and I say he because let's face it, we're talking 1826 here, right? So he could afford to loan money, and usually, so banks would loan money. They would keep deposits, but it was largely for rich people or people that were using it for business purposes, right? Okay. So, so they would have this money, and they would do these, but they could leave town tomorrow with your money, and what are you going to do? I mean,
nothing. Yeah.
Yeah. I mean, it's 1826. There's no license plate readers, and there's no cameras on every corner. These people could just up and leave and take all your money, and there was really not much you could do about it.
And I thought people were more trusting back then.
Trusting? Yeah. Not necessarily honest.
Okay. Yeah, I guess.
And then you also had the idea that, as you pointed out, westward expansion. And so some of these towns would pop up and they would be super prosperous for a short time. But then as people moved further west, the towns would fall into disrepair and there'd be fewer people there. And so the banks would fail.
Okay.
And so people didn't always trust banks. Like the bank failures were common enough that you just didn't really feel very comfortable putting all your money over there in the hopes that, and there was no FDIC system like there is today.
Sure. Yeah.
So, when people talk about the Great Depression in the 1930s and the bank and the that was the real change in the United States, was going away from the idea of having a government sponsored federal bank that was owned by the government to the Fed, that we have now, which sort of is a federal way to help manage the financial system.
It's a referee. Yeah.
And the FDIC and some of the things that are put into place. I mean, that didn't all come from one set of bank failures in the 1920s. Like, everybody didn't just go like, oh, the banks failed once, we're going to put all these reforms into place. Right. This was a series of bank failures dating back over 100 years that finally caused the federal government to step in and say, okay, we need a better way of doing banking in this country. Right.
So you had mentioned depositing money is one thing that a bank does. What else back then was there the same as banking today? Like, what else did they do?
I mean, well, just like today, they would keep deposits on I don't want to say on file, because they literally had money. I mean, that was the thing. Like today, again, comparing
money's digital right now. Yeah.
Right. I mean, you had this notion of there's a reason why old cartoons and things like that show people breaking into a bank and like walking out with sacks of money,
right?
Because they did,
right.
As opposed to now, where most banks, I mean, yes, banks do keep cash on hand, but they don't have physical cash, dollar for dollar, on hand on any given Tuesday for every single person. Like the money is digital; it's there, but it's not. it's not tangible like it used to be, I guess, in a way, if you want to look at it that way. Like we kind of look at things sometimes like it's almost like a credit system. Like you have money in your account and then you pay the fast food joint and money magically transmits out of your account and into theirs, and you don't handle cash, right? Where back then you were handling coin and cash and stuff. So the banks would keep that stuff locked in a vault for you if you had enough of it to store away that you didn't have to use it immediately. So banks were mostly for the rich.
Okay,
you had to have extra money that you could lock up and then not need tomorrow, because you couldn't go to the ATM. You couldn't just go and just pop by the bank, like we said, and withdraw funds because maybe you didn't live nearby or maybe whatever. So somebody had to be there, physically in the bank building to give you your money if it was locked up. You couldn't get it on 2:00 on a Saturday necessarily, or something like that. They made loans. Again, mostly to merchants and wealthy financiers, railroad men, things like that, but they would make loans. So if you were opening the local general store, maybe you would go to the local bank and say, okay, well, I need money to buy all of the initial stuff that I want to sell, and then I'll pay you back from part of the proceeds of what I sell at the general store, my goods and services. Farmers.
And they said, let me see your credit score and your debt to income ratio. And
we can get to that, but there was definitely no credit scores back then. Well, there were, but not in the way that we say that they are,
Right.
And then, and like I said, they did issue banknotes and stuff too. So a lot of times, even into the 1900s, and I mean, not even like 100 years, like less than 100 years ago.
Yeah.
You could still find banknotes that were, printed on the banknote. Like, this note is from the local bank of Johnstown or whatever.
That'd be cool. Yeah.
So that was a thing back then too, for sure.
That'd be cool. And you had one bank account. Like it's not like today where you have two checking accounts, you have a holiday club, you have a savings account, you opened a CD. You had a bank account.
Right. And and I don't know, like I think we take a lot of that stuff for granted, that we have specialized places for our money. This money is in an account for my, Christmas shopping, and this money is in my account for my vacation.
Right. And I can transfer money from one account to the other in the blink of an eye, or I can take money from my account and give it to you.
Yeah. Through Zelle or something like
whatever,
that. Again, not even physical money if we didn't want to use it.
And back then, I mean, moving money from state to state took weeks, and it was very risky, which is why like the Wells Fargo even came about, because they came about back whenever the California gold rush was happening.
Oh yeah.
Yeah. So these people, the pioneers, went out west to go, strike it rich, in the gold mines and the gold fields or whatever, and they'd take their gold or their money and they'd have to send it back home east or whatever, and they needed a faster way to do it. So Wells Fargo capitalized on that and said, we'll do it fast, and that's how that happened.
Fast and safe, theoretically, right?
Theoretically, yeah.
But yeah, I mean, for goodness sake, even to this day, Wells Fargo still uses the horse and carriage
as their logo
in their logo, marketing motif. Also, where the concept of riding shotgun came from.
True. Yes. Yeah. It was a very dangerous profession.
Yeah.
Yeah. I'd have a shotgun.
If everybody, now you just run to the car and scream, shotgun, and you're riding in the front seat. But really what shotgun meant was you were riding next to the carriage guy that was holding the reins. And because he was holding the reins, he couldn't defend the carriage. So he had somebody sitting next to him with a shotgun in case somebody tried to rob the carriage. Yeah. Right. So, yeah. There's all kinds of, obviously if I'm a gold miner, or I'm a 49er, as it was, and I'm probably getting paid in the gold that I find in them there hills,
gold or coins.
Yeah. But how am I getting paid if I'm not a 49er? Like if I'm somebody who works for the local hotel or something like that, how am I getting paid?
Yeah. You're getting paid in gold or coins or the local bank issued banknotes, or credit. or barter. Yeah.
Yeah.
I mean, there was something called the truck system where, I mean, that loosely translates to barter, but you could get company coins and you'd have to spend them at the company store. So
Yeah.
they were getting you either way.
Yeah. I mean,
you worked your butt off, and then you got paid in a coin that you could only use at that store, that on goods that the company spent a little on and charged a lot for. And I mean,
they were again, we're going more recent than the 1826 in this example, but it started then for sure.
Right.
But the song 16 tons is about that. It's this concept of you load 16 tons and what do you get? Another day older and deeper in debt. And these people felt like they couldn't. Not only could they not move on from their employer because of the fact that they were indebted, because they weren't getting paid in money, they were getting paid in scrip. Right. And so you're right. They were indebted to their employer, and they couldn't even, they couldn't die. Like that was even in that song, like the lyric is, St. Peter, don't call me because I can't go. I owe my soul to the company store. So that's an issue that exists all the way up into the early to mid 1900s in some cases. So yeah, that's crazy stuff.
Yeah.
So assuming that I'm not, assuming that I'm getting paid on the up and up, or even if I'm not, what happens on payday? Where do I show up at the offices, or what happens?
You're getting handed, physical money or whatever, and you're either putting it in your bank if you chose to bank, or you took it home and you shoved it under your mattress like we keep telling you not to do, or you spent it at the company store, or not the company store, but at your local general store, or paid off merchants, because that's how a lot of this worked, was on credit. I mean, you went to a store and said, hey, I needed a loaf of bread and I didn't have enough money today. Okay, we'll put it on your tab, and you'd square up with your merchant periodically. But
it's so you didn't get direct deposit.
You did not get direct deposit.
No money,
no check, no direct deposit.
No direct deposit, and probably not a check either, because again, even if I'm a wealthy merchant, I'm probably not paying my workers in checks, because what are they going to do with them?
So the government wasn't taking out income tax at the time. That didn't come about for quite some time.
Yeah, no, the concept of income tax didn't really come around until 1916. 1913. 16th Amendment.
Yes. Yeah.
Is whenever the concept of income tax became a thing in the United States.
Right. And sales tax was even later than that. Yeah.
Yeah. Sales tax, obviously, as most of us know, is local or state driven. But the federal government really didn't. They got their money through tariffs. It's one of those words these days, but they got their money through tariffs and basically taxing the imports and exports of the goods that came in and out of the country.
Sure. Yeah.
Rather than taking the money directly from the people, although in a way they still were, because just like tariffs of today, most likely that merchant or the whoever was bringing it in was passing that tax on to whoever was buying it. So, I mean, the whole Boston Tea Party for the Revolutionary War in the early mid 1700s was, this concept of, taxation without representation, and throwing the tea in the harbor to protest the fact that they were being taxed on tea, which, if you actually look at the history of it, they really weren't being taxed that much. They were actually paying less. Believe it or not, the American colonists were paying less for tea than the British population was in England.
Really?
Even with the tax. It was just the fact that they were being taxed
was enough to just
it was enough to cause them to just blow their stack.
Oh, I didn't know that.
Yeah, it was crazy. The there, I won't go into the gory details of this or the deep details of this, but
Okay.
like our area, we're in the Western Pennsylvania area. You might as well say, and you're closer. Our closest big city is Pittsburgh.
Yeah, back in 1826, we were out west. Yeah.
Yeah, we were out west for
right.
sure. Yeah, we definitely were because if you've ever heard of the Whiskey Rebellion, the Whiskey Rebellion was brought up because it was one of the first times that the United States government tried to tax a commodity. They put a tax on whiskey.
Okay.
And if you were paying a tax on whiskey in New York City or Philadelphia, you just whatever. It didn't really affect you that much. But
Okay.
out west in the Ohio Territory, West Virginia, Western PA, a lot of these people were using whiskey as money.
So
Like, they didn't
were
have
that was like
money.
their barter system. Yeah.
Yeah, they didn't have like coins and cash and money, so they used whiskey as their method of payment.
Okay.
And so you put a tax on whiskey, and now these people are able to purchase less with their whiskey than they could before, and you're taxing their only form of the payment at that point. So you're kind of double dipping and
Yeah, that's your income
getting
and
them-
sales tax. Yeah.
Yeah, and so there was a violent uprising. There was a whole bunch of people that marched on Pittsburgh with pitchforks and guns
okay.
and everything, and showed up in Pittsburgh as part of this whiskey rebellion to rebel against the federal government. And George Washington sent over 3,000 Continental troops to put down this rebellion in Pittsburgh
Wow.
in 1794.
Wow.
All over the idea of taxing whiskey.
Wow.
Yeah.
That's nuts.
So, yeah, definitely a little bit different. I mean, there's thankfully not a lot of violent uprisings over the way we handle our money these days. We have a lot of Facebook posts about it.
Yeah.
People are still angry, but they're just angry with their thumbs rather
yeah.
than angry with pitchforks and muskets and stuff. Which is a good thing, I suppose.
Okay. So
Yeah.
supposedly.
Sorry. Yes, I digress. I know. I'm sorry.
No. But so you probably didn't pay for your house with whiskey back in the day. How did mortgages work back then? Were they
yeah.
different than they are today?
I mean, yeah, definitely. I mean, there were people that had to borrow money. Now, if you're out in the middle of the frontier territory, chances are
you're building your own house.
you're grabbing a splot of land and you're just building a house, and you're
right.
just claiming that land as your own. And but
But they didn't have 30-year fixed mortgages back then.
no,
Okay.
no. As a matter of fact, I mean, the concept of a 30-year mortgage back then would have been laughable. I mean, some of these people didn't live long enough
Yeah.
to pay that off.
That's true.
So no 30-year mortgages, no credit scores, no fixed rates or anything like that. Basically, the idea was that you paid as much as you possibly could. Large down payments. You paid as much as you could for that house if you were buying one in a town or a city or something, and you were
Still a good practice today. Yeah.
still a good practice today to put as much down as you can. Absolutely. But the repayment periods were way, 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 way shorter.
Okay.
I mean, you're talking like probably 5 years, for most of these things. And really this kind of goes back to what you were saying about credit scores. Like, a lot of this stuff, whether you were a merchant that was buying a merchant borrowing money, a farmer borrowing money, or if you were borrowing money for something like buying a house or something like that, you were doing it based on your reputation in the town.
Okay.
So, the bankers,
Hey, Drew's a good guy. You should probably lend him some money if he wants it.
I mean, kind of, yeah.
Okay.
It really came down to that. It came down to who you knew,
Okay.
Whether or not your name was good. If you had there's a lot of people even today that's, my good name. Well, that comes from somewhere,
Yeah. Yeah.
And that idea being that if the people that I knew and the people that were in my town knew me and I had a positive reputation for being an upstanding citizen, then there was a better chance I was going to be able to borrow money if I had to.
Well, and like you said, the banks were mostly used by, the rich and wealthy to begin with. So you already had a reputation, your name was well known. So probably was easy to get a loan back then.
I mean, a lot of times it was sort of handshake deals.
Yeah.
It was, me coming to you and saying, hey, listen, I'm either I'm running a little short, I guess you could say, or you could come back and say, well, listen, I want to expand my business, or I want to, maybe it was even something as simple as like, listen, I've got a 7th kid on the way, and I need some more space in my house, and I got to put an addition on it. I'm running a little shy. If I had a good reputation in the town, there's a better chance I was going to get it back. But again, the expectation was most likely that I was going to pay you back that money
in a short amount of time.
In a very short amount of time.
Yeah,
I mean, 5 years probably would have been a lot.
Okay.
Where now you have a 5-year lease on a car and nobody blinks an eye.
Right.
You know what I mean?
Right.
There was that. Now the other question becomes, retirement. I have my house, I have my business, but eventually I'm going to get old, theoretically.
Yeah.
Now I might get old at 40 and die at this point in history, but believe it or not, a lot of people lived to a much older age than people think.
Really? You always hear like, 50s and or 40s and people are dying and kids are dying because they get sick at a very young age and all that. So that's longer than that.
Oh yeah. I mean, Ben Franklin was in his 70s.
Oh, I guess. Yeah.
I mean, the issue becomes when you look at those time periods, we're usually looking at an average age, like an average age for a man or woman's lifespan. And those averages were really, really affected by infant mortality, childhood deaths, young people getting cholera, things like that. But that didn't mean that people didn't have the ability to live a long life. It's just that meant on average, you probably didn't live as long.
There was a skew. It skewed it a little bit.
But there was definitely the concept of, retirement if you had the money to do so.
But there was no pension plans. There's no 401ks. No. Whatever you saved was what you retired with. Your land was your insurance policy, giving to your kids, passing it down so that they had something. But you pretty much you worked until you couldn't work anymore. You didn't work until you're 62 like you do today, or
there wasn't as defined a finish line, I guess, if you want to look at it that way.
You didn't work towards something. You knew you were gonna be working until you couldn't.
Yeah. And a lot of times it was just, I don't know, I guess it was a different mentality. I mean, the concept of the 9 to 5 work a day, Monday through Friday that we exist with in our world today is a much, much newer concept than what most people think of it as. Henry Ford is largely to, you could say blame, or you could say give credit to, but Henry Ford is a big reason why our work days and weeks look the way they do.
Okay.
And it was largely because, back in the 1700s, 1800s, like, you worked because that was what you did. You were either a politician, or you were a blacksmith, or you were a tailor.
Yeah.
Silversmith if you were doing well for yourself, or whatever, living in Boston or something like that. But you worked when you worked, and you were open if you had a shop, and you went to bed when you went to bed. I mean, it wasn't like this we are super structured. And that structure comes from the idea of Henry Ford wanting to have a structured work day for his assembly line. He needed to have workers on the assembly line when he was putting the cars together.
Yeah.
And so there was this notion that you started at a certain time, you did a repetitive task, and you left at a certain time. And it was this idea of homogenizing and structuring the work to lower the cost.
Okay.
But that's a 1910s concept.
Yeah.
It's not an 1820s concept, and it's
totally, well, I guess not totally off topic. I guess it's sort of related, but you're a history buff, so you may know the answer. I was always told that, at least around here, on Fridays, like our local schools, they get out early. Okay. I was always told that was because on Fridays, the school districts wanted the kids to be able to go home and work the fields with their families. a little bit more.
I think there's some validity to
okay,
that.
okay.
I think there's some validity to that.
Like I said, not really related, but
Yeah.
it sparked my
No, I mean,
memory, yeah.
I think there's definitely some validity to the idea that, I mean, again, we're from Western Pennsylvania. I mean, when I was in high school, we still got the day after Thanksgiving weekend off because it was the beginning of deer season.
Yeah, right.
And it was this idea that even the high school students wouldn't be in school, so why bother having class? You're going to be out hunting with dad, you know?
Right.
So, and I apologize. I mean, women hunt too, but I'm just statistically speaking, back then that was the notion.
Yeah.
Um,
Sorry to get off topic.
No. But the idea, so getting back to the whole retirement idea was this idea that, if you were a politician, if you were Ben Franklin, if you were Thomas Jefferson, you had a plantation and you had all this, you probably had enough money that you I don't even know if you really thought of it as retirement. You just scaled back your work.
Yeah.
You might still be writing. You might still be publishing books. You might still be doing things that you did. You just might not be doing them at the pace you did when you were younger. But it wasn't so much this concept of, okay, now I have stopped working and I'm just going to go do this instead and make my Barca Lounger my daily chore.
Yeah, there was probably a little bit of a passion when you chose your occupation back then too. Like now it's like, hey, I got to work so that I pay these bills and my kids can eat and they can go to school and they can do blah, 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 blah.
Yeah, right.
Back then, you did what you liked and you got paid, but you didn't need as much back then.
Yeah.
So like there was no retirement. You just, you continue doing what you like doing, just like you said, just maybe not at the same level.
Yeah. And a lot of times, even if it wasn't what you liked doing, like if you became a farmer because it was just what you had to do when you were of that age and you moved onto that territory or something, your retirement became passing along that land to your children.
Your kids,
right. So as your children got older and they took over the majority of the labor on the farm, right, you had more opportunity to, I don't want to say relax, but you didn't have to do as much of the manual labor.
Yeah.
And you sort of passed that on, and your retirement became your land, and then you passed that on to your heirs. And if your son or daughter or whatever didn't want to do that thing anymore, then they could sell the business, I guess, and do something else. But that notion, you're right, of saving up money specifically for the purpose of I'm not going to work anymore past this certain age
didn't
really exist.
Yeah.
So I think that this is really kind of an interesting way of looking at how we use it, because again, like today it's amazing to me, I think, how much is the same and how much is different in terms of how money.
The basics are all the same.
Yeah. I mean, when you talk about basics, you're talking what? Like,
I can deposit money. I can get a loan at a bank. What else?
You can save.
You can save. Yeah.
But at the same time, you have access. We have access to our bank in a way that the people back then had no earthly concept for.
Is the big difference. Yeah.
And and going back to what you said even about traveling, the concept that the local banknote would be the same in a different town or a different city if it was issued by the bank of Podunk, Nebraska, and that note would be the same in Iowa or California. A lot of these people didn't live their lives like we do. They might have lived their entire life in a 50-mile radius, of where they were born. So that was a little different too.
Like our tagline, their bank was their bank for life.
It was their bank for life. If they had one at all.
Yes.
So I would say that, unlike back then, it is absolutely preferable to keep your money as much as possible in a bank.
Right.
Banks are FDIC insured. The bank is a safe place to keep your money.
They're not going under like they did pre-depression. Yeah.
Right. I mean that is rare. that a bank fails. I mean, obviously a couple years ago, there was a very
One in
publicized
California,
bank that failed. It does happen.
Yeah.
But even then, the people that had their money in that bank were not the
Didn't
ones
lose
that,
it.
yeah,
Right.
they didn't lose it.
Right.
And bank failures are not nearly as common as they once were. And when they do happen, they're not as destructive to the people that are using that bank
Right.
as they once were.
Right.
So there's that. There's also this idea of the safety of your money in general. Like we say, like, oh, don't be robbed and don't be. But what happens if you have a fire? What happens if you have a flood? And all of your money is under your mattress. I mean, it doesn't have to be fraud necessarily. It doesn't have to be a violent robbery for you to be taken, for all your money to be lost.
Right.
If you're still of this mindset that your money is safest under your mattress and something happens to your home, it's your word against nobody's that you had that money.
Right.
So definitely, keeping your money in a bank today is way more preferable.
Yeah.
And the sheer level of access that you have to your money through, branch locations, if you prefer to do it in person, telephone banking, online banking through a computer, mobile banking through your phone. I mean, to your point,
I have more access keeping my money in a bank now than I do if I kept it underneath my mattress. At least if I had to, if I kept it on my mattress, I have to run home every time I need money. Now I can just whip out my phone or go, walk 20 feet to an ATM and say, okay, give me some money.
That's true. That's a really good point that I didn't really think about, but you're absolutely right about that. So even from a convenience standpoint, having your money in a bank is better, compared to keeping it yourself and keeping everything in cash.
Right.
And that means something coming from you because you are a cash guy.
I am a cash guy. Yeah. I've become a lot more digital since working here. Absolutely. But I have turned over to that side, and I'm liking it.
Yeah. And, regardless of whether you think that the old world way of living where we were more fluid with our jobs and worked until we sort of trailed off and all that kind of stuff, the bottom line is we don't live in that world anymore.
Yeah.
So having a good financial planner for yourself, saving as much as you possibly can, not only just for retirement, but for just rainy days and unexpected things. I mean, unfortunately, in our world today, jobs get lost, people move. Sometimes you have unexpected expenses that you just can't necessarily foresee every single time. You go home tomorrow and your water heater is blown up and you got water all over your basement. You need money to replace it and you weren't expecting it.
Yeah.
Right.
Yeah.
So having a savings, having some money set aside is definitely important, but having a financial planner, a wealth planner, and I think people get put off sometimes by that concept of wealth planning. There are people like you and I that and I don't mean to speak for you.
No, go ahead, yeah.
But there are people like you and I that while I am certainly not poor, I am not uber rich either. I am not Elon Musk, right? So the concept for me of wealth planning is kind of like, it's a term that you kind of scoff at. Like when I think wealth, I think of like the guy on the Monopoly box that's got like the monocle and the top hat and stuff. That's not me.
Yeah.
But planning for your future in retirement is still something that everybody should try to do.
Right.
As much as you possibly can. And the earlier you can start doing that, the better.
Oh yes. Yeah. Remember, time is your friend.
Yeah, for sure. I think this was cool.
Yeah, that was a fun one.
Yeah. Even though I made you endure history again.
It's all right. That's all right.
You're going to look back on this one day.
It's going to be history.
And it's going to be history. All right. I'm out.
All right. Thanks, Joe. This podcast focuses on having valuable conversations on various topics related to banking and financial health. The podcast is grounded in having open conversations with professionals and experts with the goal of helping to take some of the mystery out of financial and related topics, as learning about financial products and services can help you make more informed financial decisions. Please keep in mind that the information contained within this podcast and any resources available for download from our website or other resources relating to bank chats is not intended and should not be understood or interpreted to be financial advice. The hosts, guests, and production staff of Bank Chats expressly recommend that you seek advice from a trusted financial professional before making financial decisions. The hosts of Bank Chats are not attorneys, accountants, or financial advisors, and the program is simply intended as one source of information. The podcast is not a substitute for a financial professional who is aware of the facts and circumstances of your individual situation.
It's truly amazing when you think about how much has changed over the last 200 years when it comes to the average American and their relationship with their bank. In 1826, the average American barely used a bank. Most people dealt in cash, coins, or the barter system. If they had a bank account at all, it was likely at a small local bank they could physically visit, and there was little government oversight or protection if that bank failed. Borrowing money was often difficult, payments traveled slowly, and moving funds across the country could be expensive and risky. By contrast, today banking is woven into daily life. Most Americans receive their paychecks electronically, pay their bills online, and can move money instantly from a phone, accessing their accounts 24 hours a day. Deposits are federally insured, banks operate under extensive regulation, and customers can manage their finances from literally anywhere in the world that has an internet connection. AmeriServ Presents Bank Chats is produced and distributed by AmeriServ Financial Incorporated and hosted by Drew Thomas and Jeff Matevish. Our executive producer is Jeff Matevish. Music by Schneckmind. You can find the podcast on all of your favorite podcast platforms, or you can watch the vodcast on YouTube. For now, I'm Drew Thomas. So long.